Welcome, everyone, to another exciting episode of the YouTube show and podcast, None of Our Businesses, where we talk about what's going on the week in general news, business, taxes, finances. Maybe it's none of those things, but it's always from the perspective of accountants. Not just one accountant, I'm Ty Carr, but three accountants. With me today are Tammy Hess.
Hi, everyone.
And Charlie Zigmund.
Hi, everybody.
So what are we going to talk about today? Well, we're scratching our heads as Nissan takes a loss for quote-unquote selling their business in Russia for €1. Then we're going to talk about, well, it's October, mid-October, and that's the final deadline for filing tax returns. And so what can we say about late filing and late payment tax penalties? Then kind of a science corner topic, we're going to talk about the reproducibility of experimental results. And we're going to round off this session with discussing body language. Is it useful? Or is it not useful? All right. Well, let me kick it over to Charlie.
All right. So I've got an article we can talk about today from a source called Reuters. The article is titled "Nissan Takes $687 million Loss as It Sells Russian Businesses for €1." So what's going to happen is that Nissan is going to be handing over its Russian part of its operations to a Russian state-owned entity called NAMI, N-A-M-I. It's going to be, like they said in the article, it's going to be for €1, which is actually now less than even $1 at the time of the article being written. It mirrors a decision made by Nissan's top shareholder, Renault, who's also exiting Russia. And it turns out that Mitsubishi is also looking to exit Russia as well. Now, there's kind of an interesting characteristic of the deal in that they're given the option to buy it back within 6 years. But it seems like kind of an interesting question mark to me, because who knows what the state of that business will be 6 years from now when it's run by, Russia during that whole time. And so I kind of wanted to open it up for discussion to just see maybe there's something about this that I don't understand, but why would they hand over the business to a Russian state entity as opposed to trying to sell it or trying to really anything else other than that? What do you guys think?
I mean, from my perspective, it's not surprising that they may have to leave the assets behind. I think a different angle on your questions from my perspective, and I think about it also thinking about, how would you go about the accounting for this? If you're thinking about in the accounting would be looking at the underlying economic substance of the transaction, which is really kind of, to me, where the question is, right? Like, why is this article, and why would they structure it as a sale? I mean, what's really happening? Like, did the Russian government seize the property? In which case, it's a loss on that event. Did they just decide to exit? It sounds like it wasn't just a flat out seizure. That other companies are doing something similar, and their parent company was doing something similar, or one of their investors is doing something similar, and so, but also if you decided to exit somewhere and had to leave a bunch of the assets behind, like if you're Virgin Intergalactic and you send equipment to the moon and you have to leave that equipment behind on the moon, you don't say you sold it to the moon people. You say you had a loss on, or you had an expense for the equipment that you had to leave behind. So it's curious that with Nissan exiting Russia and having to leave their assets behind because of logistics and maybe, you just pure like the logistics of not being able to take their stuff with them and recover those assets, that they would frame it as they sold it, for such a and I wonder if framing it as they sold it is a political move that coincides with the option that you mentioned, in the sense that they have an agreement with the Russian government that within 6 years they could come and buy it back. So framing it as they sold it to the Russian-owned, state-owned company maybe left them the window of opportunity that maybe they could re-enter that market and get some of those assets back in the future. So that was better than just flat out saying, we have to leave because Russia is in shambles and we just lost this equipment. This idea that they sold it with this option frames it or tells a narrative that perhaps leaves an opportunity open for them. I mean, those are the things that go through my head because when you think about the options, I go back to why don't they just call it as an abandonment of assets and a loss on that? Why frame this as a sale?
Yeah, I think you're right, Ty. I think that it has to, because it's like a 6 year, I mean, it's an unusual deal. Like when you hear how it's structured and the way that Charlie explained it, as well as the fact that they have 6 years to be able to potentially buy it back. I think it is almost like a political kind of stance to where it gives them the option to come back and retrieve their assets or utilize their assets again. But 6 years, I wonder why, how they came up with a 6 year time frame in that sense. And a lot can happen in 6 years, as we know. I mean, shoot, a lot of it can happen, 6 months from now. So it is just kind of a weird situation. But the question I guess I have when you were talking about how they're kind of framing the story, who are they framing it for? Like, what is the purpose of even saying whether or not it's you're losing, so much money on a sale versus losing so much money on the abandonment, or potentially that there's an option to get it back in 6 years? Like, I'm just wondering, who is this? Who are they trying to market this to, or share this?
The article doesn't make that clear, but I was thinking about that same point. I mean, it's got to be shareholders because everybody else involved is, basically Russia's part of it is clear. Their part of it is clear. It's got to be the shareholders are the only people left to sort of impress with this, not even impress, but, to sort of influence with this decision. But yeah, anyway, so enough of that. We'll kind of keep an eye on it, see how it goes over the next 6 years. And then we'll see if you have another article we can talk about, Tammy.
I do. So mine is more topical in terms of time-wise. We'll have to wait 6 years for this one. Most people have to wait until Monday. But Accounting Today released an article earlier this week forewarning us that there are going to be higher interest rates and renewed penalties when filing late this year. So roughly 19 million taxpayers requested an extension on the April 22 deadline, and they have until this Monday to file their returns. Since October 15th falls on a Saturday, it gets, moved over to Monday. So according to this article, the IRS is back to imposing fines for those that missed the upcoming deadline. In addition to that, they have increased the interest rate for underpayments by 1%. Therefore, you can expect to pay 6% on underpayments. The article did provide some tips in helping ease the pain some folks find that they have when they're filing their tax returns, which may be a little bit too late for the October 17th deadline, but it's good to keep these in mind for the future, or if you're working over the weekend, to keep these in mind. But the first thing is to file online. So try not to do the whole mail filing part, and it's super quick and easy to file online. Double check your personal information. Sometimes the simple mistakes can lead to long delays. So make sure you don't transpose any numbers for your Social Security or forget your dependent Social Security numbers. Number 3, beware of penalties. So there's the failure to file penalty, which is charged for not submitting all the documents. And that could be 5% of the unpaid taxes for each month that the taxpayer is late, and up to 25% of unpaid taxes. The second one is a failure to pay penalty, which is 0.5% of the tax owed after the due date for each month that it's unpaid, and up to 25%. And the third one is interest rate, or the interest that's on the underpayment, which is now 6%, as I just said. And then the other thing is to just remember that the IRS is most likely not going to waive or eliminate late fees as they have done in the past for the past couple of years. So if you're expecting that they're going to waive it, they most likely won't. And so the other thing to kind of keep an eye out for is pay attention to credits that you may be eligible for. And the 5th thing that the article suggests is to utilize professionals. So I thought it would be good to kind of talk about trying to determine when it's time to use a professional may be tricky. And so I wasn't wondering if you guys had any thoughts as to when a person should make that move, or if you had any other tips than what was mentioned in the above article.
Sure. Yeah, I've got some kind of thoughts on it. I think a lot of it has to do with the level of complexity of what you're filing. I mean, if you have a very basic return and you're being given your documents by a third-party source like an employer, and so there's already some expectation that these are the right numbers, they belong, and there's not a lot of questions to ask, then I think that's a good example of somebody who could use an online service. But I think if you have a business that you're running that has perhaps positions that it would take on different tax issues that it would like to discuss, that's the kind of person that I think would, make better use out of an actual CPA or a tax preparer, something like that. The other thing I thought was really interesting, I was always kind of blown away by this. If we caught with what Terry was saying, the penalty for not filing is 10 times the penalty for not paying. And so it's just always been kind of a really interesting thing for me, because it's like, takes away a lot of the excuse for even people who say, I can't afford to pay my taxes at some point in time. It's like, well, even if you can't pay it, it's 10 times worse to not file. So you might as well file, let them know. And so I think that's one of those pieces of advice that often gets overlooked, because people will just throw their hands up and say, I can't pay, I'm just not going to even file. But, 10 times worse mistake. So I just thought that was interesting. What do you think, Ty?
Yeah, I think on the interest and penalties front, I think I think the other thing that is good to remember is that, if October 15th is the extended due date, that the payment of the tax for the 2021 year was already due. And so, at this stage, even before October 15th, taxpayers would have been subject to underpayment interest costs. And actually, I think what a lot of people miss is that, we have a pay-as-you-go system. So even before April 15th, 2022, the 2022 tax was already due, and you would have been subject to underpayment of estimated tax. They call it underpayment of estimated tax penalty, but it's essentially an interest charge that would have been tallied on your amount due up until you got to the April 15th deadline. The significance of assuming, as Charlie said, really the gravest sin that will cost you the most is not filing. And so, if you assume that you're going to avoid that and that you're going to file, you'll either file an extension on April 15th or you'll file your tax return. And then if you do file an extension on April 15th, you'll file your tax return by October 15th. And we're talking about an individual's tax return in this context. And if, assuming that you're going to do that, then the thing to, the significance of the due date, paying before or after the due date of the tax return, is that, there's a late filing, there's a late payment penalty, and then the late payment interest. And so if you haven't paid your tax before the original due date, before April 15th, 2022, then you could be subject to underpayment of estimated tax. But the thing about that is that how much tax you should have paid throughout the year is a little that requires a little more calculation, because it's, you haven't finished the year, right? So if the proposition is that during the year of 2021, you were supposed to be paying your taxes you go, even before you got to December 31st, 2021, it's kind of circular logic, right? Like, how do you know that you're paying enough tax if you haven't actually completed the tax year yet, right? And so the way that's dealt with in the tax law is by coming up with methodologies that are acceptable for estimating the tax you would owe and paying that estimated tax. And so if you don't do that, then you could be subject to that interest charge that's an estimated tax penalty. When you get to April 15th, if you still haven't paid your tax by April 15th, but you do file an extension or file the return, then you could no longer incur underpayment of estimated tax penalty, because at April 15th, you now owe the tax. The calculation is presumably known, or could be known better than it was before, because it's time to file an extension or your return. And so at that point, you would be subject to a penalty for late payment of tax after April 15th. And then you'd also be subject to a separate interest charge for late payment interest, which starts on April 15th. So if you think about it, it's like if you didn't pay all year and then you still haven't paid April 15th, what was underpayment of estimated tax penalty, basically you quit being subject to that law, and you now are subject, that all that cost that you've incurred is a liability on you, but now you switch over to a different law, and now you're subject to interest on having not paid your tax from April 15th onward. And the fact that you haven't actually filed the return because you filed an extension doesn't change that issue. So by the time you get to October 15th, everyone's already been accruing. If they haven't paid their 2021 tax, they've already been accruing these penalties and these interest at that point. And so that's a very long outline of that issue. But I just wanted to kind of clarify or make sure it's clear that there was nothing magic about the October 15th date in terms of your late payment interest, because you already would have been subject to that and it would just continue on. What's magic about October 15th is if you haven't actually filed the return, that's your opportunity, as Charlie was talking about, to avoid a penalty for not filing your return, which is different than the penalty for not paying the tax. So there's a reporting penalty versus a payment penalty, right? So just that for our listeners, just that outline or reminder on that point. But then in terms of Tammy's question about, at what point do we think somebody, or do I think somebody needs to be seeking professional advice? I think it's different for every person. It's like, look, if this kind of stuff is not something you're good at managing and keeping track of and dealing with on your own, then maybe you need professional advice sooner than somebody else who otherwise, they may not be an accountant or they may not be a tax accountant, but maybe they're a project manager in their world, or they're otherwise kind of a detailed oriented person that does a lot of paperwork and tracks things. And, it's not, and so they don't have to be a tax law genius if, as Charlie was talking about, if they have a relatively simple tax scenario, and they can keep track of paperwork, they might be able to handle it on their own. And frankly, I think in a wide variety of cases, they can. And, Charlie mentioned online services. I think that's right, is that a lot of the software, particularly for individual tax returns, has developed to the point that a lot of folks can, I think, legitimately get a good result by using software to file their tax returns if they don't have complex situations. Because when you go to a professional tax preparer to have your tax return prepared, how do they do that? Well, that professional tax preparer asks you to gather all of your documents, your W-2s, if you have any 1099s, your bank, sometimes certain kinds of bank statements and things of that nature. And they give you a questionnaire where they ask you line by line things about your financial life and things that happen during the tax year that would affect your taxes. And you fill out that questionnaire and you provide them with the documents, and then they proceed to use software to prepare the tax return for you. And they use their professional expertise to identify things that are missing or opportunities where maybe there is a tax advantage that you could take. But the work that they're doing as a tax preparer in that regard is fairly programmatic. And so if you go to use modern software to prepare your tax return, how does that work? Well, the software asks you to gather your documents, and it gives you a questionnaire, which you fill out line by line, questions about your current financial situation and what happened during your previous tax year, and then you put all that information in, and the software, is working through that data and programmatically determining, are there opportunities that you might be able to take from a tax perspective? Are there missing information that you might need to get? So I think, and so the question boils down to, your experience as a taxpayer who's either using a service or using software is probably going to be very similar. So the question really comes down to, is your situation simple enough that current artificial intelligence and software can identify relevant opportunities for you and identify things that are missing? Or is your situation complicated enough that the software, there's a high chance the software might not catch something important, or a reasonable chance? that the software might not catch something important. And so I think that's what it comes down to. And my experience suggests that a large variety of taxpayers are actually at low risk of missing something if they just use software these days, when you're talking about individual taxpayers.
Yeah, I would agree with that, Ty. And I think it's probably my only tip for that is to just start your process early, right? So like if you are kind of going along and you plan on doing it yourself and you're utilizing the software or a software online, any type of thing, and then you think that you're pretty confident that you can do it yourself, that's great, kind of get it started. But you might want to do it early. So in case you do run into those issues, or it's not spitting out what you think it's supposed to spit out, or there's a big, flashing error sign that comes up, that you have time to go then seek some advice or some help from some tax folks. Because if you're trying to do your taxes tonight and you plan on hit submit on Monday morning to meet the deadline, if you do run into issues, you're going to be out of luck in trying to find a tax professional that can help you get those filed on time. So maybe start the process early. And also, even when you're trying to find somebody too, it's there. I'm sure a lot of the tax folks would love it if people came in early with their documents and got their tax process started earlier than most and not having to extend. So maybe too late for 2021, obviously, but as we're getting closer to ending 2022, something to kind of think about of what you want to do for your own tax planning in terms of planning for the filing. All right. So Charlie, I think you have our next article.
Absolutely. I got another one, kind of a little bit different of a topic, but I think we can kind of circle back to more business related. But there's an article in nature.com called 1,500 Scientists Lift the Lid on Reproducibility. And so what it's talking about is that there more than 70% of researchers have tried and failed to reproduce another scientist's experiments. And so you would think that if an experiment is set up well, it would be very repeatable. It would give you the same answer, and you could draw conclusions from it because that procedure really made us understand it. But it's finding that that's not often the case. It revealed that there's sometimes contradictory attitudes toward reproducibility. Apparently, although 52% of those surveyed agree that there's a significant crisis of reproducibility, less than 31% of them think that failure to reproduce those published results means that the result is probably wrong. So a lot of people, when doing, a lot of scientists, when redoing these experiments and they can't produce those results, aren't actually ready to come to the conclusion that means that, hey, the first one gave us a wrong answer. And so I think that's a really interesting way to interpret that. The article says that data on how much of the scientific literature is reproducible is rare and generally bleak. So a lot of times they're not even trying to ask, can we reproduce this result? And then it said that there's a minority of respondents who have reported ever even trying to publish this type of study. 1/3 of them said that their lab had taken concrete steps to improve reproducibility in the last 5 years. So I think the highlight there is only 1/3. And I thought it was interesting because on the one hand, this is more in the scientific community, but I know that in businesses, there are often studies done that are used to drive business conclusions. And I guess my question would be, if we can't trust the results of any given study, is it true that we can make any meaningful decisions from these studies? Or is it perhaps that there's something materially different about commercial studies than these scientific type of studies when it comes to reproducibility? What do you guys think?
I think in the commercial context, the way what you were talking about kind of triggered in my head was the idea that businesses are often seeking to create reproducible processes, right, through standardization and to create efficiencies that way. And so I think that the default business objective is different than the experimental scientist's objective, in the sense that they're working through a process that is not intended to be charting new ground. It is intended to be something they already know how to do, to optimize it, to make it efficient, to make it profitable, and to make it reproducible so that it can be scaled, in some fashion, to maximize the profitability of that situation. Not to say that there's crossover in the sense that businesses do engage also in research and development, in which case they are behaving like the experimental scientist. But I would say that that's not the core or default activity of most businesses. That is an ancillary, very necessary in some industries activity, but it's not their core or default thing that they're doing, right? But a company doing research and development, I would presume, is similar to the experimental scientist in that regard, where and that gets back to your article, which is looking at the disturbing idea that you've got these experiments going on to test a hypothesis. They come up with a result. They then draft conclusions to these hypotheses, publish conclusions about their hypothesis and about their experimental results. And then it turns out that at an alarming rate, you can't reproduce these experimental results. You can't follow those experiments, can't be reproduced and obtained with the same results. That more often than not, that does, to your point, to your question, I think that does raise the question of, well, can we really say that we've arrived at conclusions to the hypotheses that are being put forward on these things? And I wonder if what that really means is that as a society, we're not actually getting to conclusions on hypotheses like we're doing a lot of experiments and we're drafting a lot of theories with anecdotal evidence that might support a hypothesis or might disprove a hypothesis, but we're actually not getting to any conclusions because we don't actually attempt to reproduce those results. So, yeah.
Yeah, I just want to say that thought is exactly what made this article interesting to me, because we all rely on those, whether we like it or not. Everybody to some level relies on some study. And yeah, if it's meaningless, then how much other stuff is meaningless?
Yeah, I think what it brought to light to me is like how many people are just relying on one study or one shot of a study to base their information on. Because Ty, when you were talking about the R&D and like how they are very similar to scientists. And actually, when I worked in the food manufacturing company, we would call them food scientists, and where they had to do a lot of tests and studies to see how one particular product or situation was going to be actually then moved up or one of it's stable and was going to be a good product to sell, but also if we could scale it up to, for the masses. And so what I would say in that case, there was more than just one study. There's, usually they would have to do multiple studies to see how is this going to be, how the shelf life is going to be from, 6 months from now to a year from now, all those various different things. And, granted, we relied a lot on the studies, not just one particular, attempt of a study, because to your point, I mean, the things can change, and you want to make sure just because you did one study and the results are one way, what happens if you re-perform it? Do you get the same results? And so the article made me a little bit nervous in the fact of like, are we only doing one study to make decisions off of everything? And then, how do you extrapolate that out? That does make it a little bit nerve-wracking, because I would say one study doesn't give me all the answers. It would be multiple studies. And especially if they're able to come up with the same results, then you feel a little bit more confident in relying on that information. But yeah, that's a little bit nerve-wracking on that side.
All right, Tammy, I think you have another article we can talk about, right?
I went looking for an article on body language in business and found one from Forbes back in August 2022 titled 15 Common Body Language Mistakes to Avoid When Talking to VIPs. The article begins with the notion that when meeting with the VIP, investor, or partner, you want to present yourself in the best possible light, which involves the content of your conversation as well as your body language. On a side note, I would expand this to all people you meet in business or in your personal life, but we'll kind of stick to what the article is talking about. Most of us are aware that nonverbal communication can convey more information than words that are actually being said. The article suggests that avoiding 15 common body language mistakes will help keep your VIP conversations running smoothly. When I looked over the 15 mistakes that they had listed, I noticed a few themes and kind of grouped them together. So the first one was relax. While you should be mindful of your body language, try not to be so concerned that you appear to be nervous or awkward. 2, pay attention. Keep eye contact keep eye contact. Don't multitask or get distracted by other things around you. 3, be mindful of what your hands are doing. Are they closing off the conversation? Are they showing how you feel? Are you using your hands as tools? So I'm going to ask a few questions for the group. The first one, and you guys can't see it right now, but they're all gesturing with their hands. But the first one is, how heavily do people rely on body language? 2, does the video conferencing help or cause more challenges when you're trying to read or present body language? And then 3, should you ask what your body language is conveying or seek confirmation as to what you interpret someone else's body language is telling you?
I'm going to hone in on that last one. I think it's got to be both. You should watch what you're doing because often you give off, not you, but me or anybody gives off signals that they don't intend by doing things like crossing their arms. That's what I'm guilty of. And the way the article phrased it is it was like, everyone who's crossing their arms is definitely hiding something. And I'm like, no, that's not how it works. So I think there is a little bit of back and forth to it. But this idea of taking this nonverbal cue that is like subtle and hidden and then bringing it to light by saying, hey, it is me crossing my arms making you feel weird. I think that's always just a good idea, right? That's just part of transparency and part of, effective communication. And so, I think a lot of people don't think about it. One of your other questions was, are people focused on this, or is this just something that kind of happens? And it's like, I do think there are some who are keyed into that, but I think many people don't think about it. They just do what feels comfortable. They're focused on what they're saying, and all their nonverbal cues are sort of what they naturally are. And so I think it's something that gets, slipped up on. And I think this is a little bit branching off, but I've watched some like interrogation type videos and stuff. And so often that is where that ends up getting used. And so even when somebody is maybe guilty of something heinous, it's so ingrained in them that they can't hide these nonverbal cues, right? Even when they know they're looking for them, it still comes out. And so I don't think it's something people can turn off, even if they try really hard. What do you think, Ty?
I think if you are the person who is communicating, I think you can pause and ask the question, what's the value of not of controlling my verbal cues, right? Or my nonverbal cues? What's the value of controlling my hand gestures or my body language or that kind of thing, right? If you assume on one side of this equation, if you are the one communicating and you assume that, as a natural person, you have kind of you have body language that kind of goes along with what you're thinking and as you're talking, and then, so there are cases where you maybe don't want to reveal everything that you're thinking. And so maybe that's the reason for controlling your body language. But if that's not the case, like if you have nothing to hide, so to speak, then I think you can question the value of trying to control your body language, because it feels to me like a way of trying to limit the cues that other people get, because you don't want them to pick up on the wrong message, or you don't want them to fully know what's in your head, or those kinds of things. And so I think really, in my ideal world, the responsibility for dealing with body language would actually be more on the receiver. And I think I forget the name of the book, but Malcolm Gladwell actually wrote a book about this topic, not necessarily about body language per se, but it was about I think it was about nonverbal communication and other signals and things, like people, like when they smile or frown, and what their facial expressions mean, and that we think that these things are innately human and we know what they mean and we interpret from them based on that. But in Malcolm Gladwell's book, I wish I could remember the title here, he goes through some very he goes through a bunch of cases and some very chilling scenarios where people have completely gotten the wrong messages and it's created tragic scenarios where because people misinterpreted on the receiving side what they were seeing in the body language or in the action of other people. And so I think that's why I think the responsibility has to primarily be on the receiver. I would say on this topic, I think in a better world, we as receivers of communication would be careful not to overinterpret body language, because there's because Malcolm, as I was mentioning, that book kind of lays out the evidence that we do that to our detriment across a lot of parameters. And it's interesting to think about that point, like when you ask the question, then does communicating through video conference, which or phone, which limits the body language components, is that positive or negative, right? Like, does it limit people's ability to overinterpret or misinterpret body language? Which is the flip side of the criticism that you hear on the other side, which is, well, I would have better understood them if I saw, if we were face to face, if we were in the same room, I would have read their body language and I would have understood kind of where they were coming from better. But instead, the message, fell flat, or it felt aggressive or negative when maybe it wasn't. If I had been in the same room with them, I would have realized they didn't mean it that way. And, but again, I think I keep going back to that book that Malcolm Gladwell would say, we are overestimating the value and our ability to actually understand communication from that kind of body language, being in the same room kind of thing.
Yeah, and I think I like that idea though too, about, because I think we're all going to assume, we're all going to interpret things the way that we see them, and I think that by doing that, you need to not only kind of fact check yourself of like, am I seeing what I'm seeing, or even just be bold enough to say like, are you upset, or are you, what is it telling you? Maybe you don't sit there and say, when you do your hands like this, I feel like you're, I don't know, doing a power move, but you can just say, try to figure out a way to ask that question of what they're trying to convey. I think the other thing too is in the article they talked about with the webcam, it's actually a little bit difficult because depending on where your monitor and where your video cam is, you could be, looking at the person talking, but if your camera's over here, it looks like you're looking at something else. And so I think that actually can make it harder for folks, because if you're trying to make eye contact, you're not making eye contact, or you could put, everything up and you have a screen or something in front of you, and you could be making all the eye contact in the world, but you're not looking at the person you're talking to at all. You're either looking at yourself, or you're looking at a different document, or you're doing whatever. But I think it makes it a little bit challenging, because with the video cam, especially, everything is going to be based off of, your face and your eyes. And so if you're, people can read into that, or they can, not read into that at all too. It really is kind of challenging. Ty, did you find the book title by chance?
Yeah, it's called Talking to Strangers, and I was just looking at a synopsis in it. And so it says, which of the following clues about body language could help you? People smile and laugh when they're happy. Strangers cross their arms when they're uncomfortable or defensive. Someone doesn't meet your eyes and glances away when they're telling a lie. If you thought they all could help you, you're correct, but you're also completely wrong. As it turns out, body language isn't as predictable as we've been told. So, I think interesting book, interesting read. Like I said, it has some tragic case studies in it, but the book's called Talking to Strangers. And yeah, I would recommend folks take a look.
Good. I'll do that. Since I got my taxes filed, I don't have to work on the tax deadline this weekend. So that will be what I will do, is read a good book.
All right, everybody, that's going to do it for the None of Our Businesses YouTube show and podcast. Thanks for watching. Thanks for listening. And please tune back in again next week for more business updates from an accountant's perspective. Not just one accountant, 3 accountants. And also, please check out our sister podcast, Profitless on Purpose, where they're talking anything and everything in the nonprofit space. Thanks, everybody.
Bye, everyone.